Well, hey there, gang. Good morning, good morning, good morning to each and every one of you as well. Well, great to see you. Looks like everybody's bright and perky this morning. That's great. And Dr. Obata, that's great. I'm glad you were able to rearrange your schedule and take the day off to be here. So that's fantastic. And to each and every one of you, fine, good morning. Yeah, thanks so much, gang. And hey, Lee, just so you know, Sarah's going to give you a call later in the morning. She'll get you all fixed up there. And then I'll be following up with you later today. So that'll be great. And yeah, Maggie, the whole gang there, good morning. Great to see each and every one of you. So basically, what we're going to kind of do this morning is go ahead and start out. I'm going to kick off today. Then I think the way we're going to basically do this is Hubert's going to step in. And then Dr. John Clayberg is going to be here. And then we're going to have Norm Hallett here as from a trading psychology perspective. And then we're going to have John Carter. So that's our lineup as I know it for today. And we're basically just going to go for the next several hours between us and, kind of carry through the day. This is something special we want to do for all of you here in the live trading room as a, like I said, obviously you're all here. You're very serious. And, yeah, today is going to be primarily psychology focused because, if I see a compelling trade, obviously I liked it. We did 3 trades yesterday, as you know, David. And despite technical challenges, which was great, as you talk about psychology, you think about the ongoing technical challenges I had yesterday, and how even going into the trades, knowing I had those challenges, how I handled them. That's all part of psychology too. So. But basically, definitely the focus today, I want, people ideally to step away from the buttons, stop clicking, stop looking at charts, looking for the next trade today, and really listen to what they're hearing. And that's the thing. We debated doing this at night, but the problem is there's so many of us, and rather than, giving us each, 15 minutes a slot or something, it made more sense just to do it during the day. Now, the challenge is there's going to be some of you who are going to try to, still focus on looking for trades. But I really, no matter when you review this this video and you're listening to what we have to say, I really strongly encourage you to open your mind and step away from the buttons today, and not try to click into trades. And because this is important stuff. You've often heard me say that I feel like the holy grail of trading is within, not just found in a great setup or an indicator, because in the end, how you manage those things is all based on psychology from my perspective. And even once you have that winning streak from identifying the right kind of trades, the right kind of setups, can you continue that? Is it sustainable? Is Superman, Tasmanian Devil, Little Piggy, things like that kind of kicking in there? All things that I'm going to talk about as we go ahead and we start off this morning, okay? So with that being said, what we're going to do is we're going to actually get right into it. And mine is going to be something that people have heard. Some people have heard before, or some people have heard bits and pieces before, or different perspectives on, and then some of this is for a lot of you, you haven't seen this at all. The part of this we talked about in a 3-day live trading webinar we did back a few weeks ago, and or a month or so ago, and so but there's a lot of people obviously that couldn't be there for that. So I think that there's some really good information, just even from myself, and then of course with the cast of characters that we have lined up again. Hubert, Dr. Clayberg, Norm Hallett, and John Carter, I think there's a lot of great perspectives. Okay, so with that being said, I'm going to kick it off here, and let me move the screens over, and everybody can see and hear me okay. Is that right? Okay, excellent. Thank you very much. Just making sure there. one more time before we get started. You know how those technology things go sometimes. It's like start presenting, and all of a sudden it's like 10 minutes later you find out somebody can't see or hear. So what I want to talk about today is some of these key things here. As we talk about the psychology of winning, this is a really interesting topic. Many of you have been with me, whether it's been several weeks, months, or years. Some of you are literally brand new off the boat in the last 24 hours. So I'm new to you all across the board. Boy, aren't you in for a surprise. So but for everybody, even those of you that have been with me for years now, it's really great when you think about the progression. We talk about these different, this mindset, okay? And so the psychology of winning, and how have I gone 14 months without a single losing trading position in the live trading room? Well, people will attribute it to different things. Well, you have money and you can make money with money. Well, or you've just been doing this for so many years, but neither of those things actually is a guarantee in any way, shape, or form of success. We've all talked about in the past Victor Niederhofer. Victor Niederhofer had $100 million account, blew it up overnight. Big institutions still have big losing trades. Some of the smartest minds on the planet. So basically, I want to share some of the things that I'm looking for. And some of these may look at, initially, not just, some of these are clearly psychology. Some of them may look like, well, those sound like tactical versus psychology, but I want to make sure you understand how they are psychology, okay? Because even the way you manage your tactics is still part of who you are from a psychological perspective, isn't it? So with that being said, what we're going to do is we're going to talk about each one of these, okay? The patience to not gamble, the my way or the highway. Now, you've often seen me put that sign up, the my way or the highway sign. And of course that sign is to, and for those of you that are, well, brand new, let me actually go ahead and pull that up just so we can, these references will be meaningful even to those of you that are brand new today. Okay, so let me pull that up real quick. And what you're going to see here is this little document that we often pop up. What this is really here to, exemplify, or the point that it's meant to go ahead and share with people each day, is there's different courses of action that people can take each day. They can stay on their trading plan. They can stay on the straight and narrow here. They can stay on what they've determined. It's one thing during the trading. It's one thing at night in the comfort of your comfortable chair in front of the TV, when you're curled up and all feeling all warm and fuzzy. You're not under the pressure of the daily trading session to come up with a really great trading strategy, isn't it? How many of you have sat there at night, played with a moving average, played with a stochastic, played with any number of different types of strategies, and then sat there and said, wow, that's it. Man, that works perfect. That every time I'm back testing it, like it works like 90+% of the time. That's it. It's like the Holy Grail. Sure, exactly. Well, exactly. And some of you, my favorite programmers in here, who I know are little geniuses that are running off each night doing just that kind of thing. You've been there. We've all been there. I know I certainly was there back in the 90s when I was even part of this club called the System Trading and Development Club. I was sitting around there looking for just the right type of trade, only to go ahead and find that then in the real battle, everything looks great in hindsight. And you hear me talk about that in the live trading room all the time, right here each and every day, don't you, gang? You hear me talk about that. But can you do the same thing on the right edge of the chart? It's one thing. It's amazing how many people are, superheroes, on the left side of the chart. But then on the right side of the chart, they can't function properly. Well, so if they can't function properly, is that really a tactic, or is there psychology involved there? clearly there's psychology involved there. And so what happens is you need to be able to translate what you do in the comfort of your home during off-market hours to the regular trading session. So this my way or the highway is basically part of my risk trading plan. Am I staying on my risk trading plan? Or am I being tempted by this pretty glow, this pretty blue light over here? Or, am I looking over here saying, wow, look at that. That's cool. It's a tunnel, and it's a light at the end of the tunnel, and I'm getting ready to go ahead and get out of that tunnel. That's pretty cool. And in reality, that light at the end of the tunnel is a freight train coming right at you, ready to smack you and take profits out of your trading account. So this really is meant to exemplify the fact that I don't want to go ahead. I don't want to bend and twist and torque the trading plan to suit my needs for fear or greed, fear of loss, the greed, the fear of missing out on a great trade. So if the setup's not there, if it's not high enough probability, if it doesn't meet my trading plan, then I'm falling off the road if I take that trade. Okay? And how many of you have been in a situation before where you knew, well, wait a minute, okay, before I take this trade, this moving average is really supposed to cross above or below this level, or this stochastic is really supposed to be above this level or below that level, or, this price pattern is actually supposed to have a little bit more volume associated with it, but that's okay. Most of the stuff is there. I'm just going to do it anyways. And you found yourself twisting your rules and bending your rules because you were anxious to take a trade. Yeah, sure. I appreciate your honesty. Yeah, I mean, it happens to, most traders will at some point bend their rules. And we all know how highly disciplined I am, and I've bent my rules. But that's why I go ahead and try to focus on this graphic here, and we'll share that in the room. So for those of you that are new when we're talking about that, this is, when I'm talking about when I say the my way or the highway, this is the graphic that I'm looking at. Okay? So let's go ahead, armed with that information. The patience to not gamble. This right here is so important, and I know many of you have already learned this the hard way. The question is, have you really learned it? See, so I'm trying to address traders that have been here with me, not just a couple weeks, but also months. It seems like some of my most successful students here seem to take 3 months to 6 months to have their aha moments. And so I'm really not just addressing people who have been here just for a couple weeks, but also people who have been here for the longer term. Also, as we found out the hard way, more than a few of you, haven't you? The longer your success, the more you started to veer off the highway and didn't even know it. One of the things I'm seeing here is what happens is over time, you started out on this side of the road, if you're in the United States. If you're in London, it'd be the opposite side. Going down the road, doing your thing, and over time, you're just slowly veering off, okay? You're just slowly veering off, and next thing you know, before you ever know it, it just kind of happens so slowly and so subtly. You wake up one day, and you have this loss, and you're like, what did I do wrong? Well, if you go and evaluate it, and you look, you find how different you're trading from when you started back here, okay, to where you ended up here, right? So you may have had this great system in place where a certain type of price action had to take place, a certain type of moving average crossover had to take place. This, that, and the other had to take place before you'd take a trade. So what were you doing? You were focusing on very high probability strategies. Now, tell me how this sounds to each and every one of you, how familiar. So you focused on really high probability strategies, but what you got tired of seeing was other people around you making money on some trades where they weren't quite within your comfort zone over here, so you started to veer off over into this lane over here. You weren't completely off the highway, but you started to veer off into the other lane of traffic, okay, kind of not sticking really tight to your rules, because you found that other people were making money and you were missing the boat. Next thing you know, then you're trying to go ahead and so instead of making one trade a day or one trade every couple of days, now you've increased it to a couple of trades a day or so. But then all of a sudden you want more than that. And then what happens is you're coming down the highway and you start to veer off some more and take even more, well, aggressive trades, things that don't meet your full criteria, but you're looking for more and more and more. You just get to the point where you want more and more and more trading, okay? And so what you do is you start to bend the rules more and more. You get away from your original trading plan. So even though you started back here, you took a lot less trades, but they were higher probability, you wind up down the road completely off the highway and suffering losses. You know, how familiar does that sound to many of you as you've started to bend and twist your rules to suit your purposes of feeding the beast, looking for more and more trades? So, is that a tactical issue or is that a psychological issue? Okay, that is a psychological issue. All right. So, as we're looking at this, a real key is having the patience, having a trading plan. Okay, and you know, of course, we've got the Chicago event coming up here next month. I know that a whole bunch of people are coming to that. So, you know, the good news is, you know, we're going to be talking about trading plans, and you know, trading plans are really, really important. So, because if you don't have a trading plan, you don't really have that roadmap. How do you know if you're even on the road if you don't have the map? Okay. So if you don't have your GPS, you don't have your map guiding you, how do you even know you're in the right spot versus being over here? Okay? So that's really important. And that's why, you know, the trading plan portion of the Chicago event next month, which is what, I guess it's like 4 or 5 weeks from now. So that's going to be pretty exciting. Some of you I'm going to see for the first time ever, even though I've been talking to you for years. So I'm pretty excited about that. Others of you I've seen recently. And you know, that's a you know, really important you know, first meeting or second meeting and so on and so forth, developing those relationships. People like Peggy, who I just met in Las Vegas here a couple months ago, now I'm going to get to meet her husband in that too. So strengthening relationships we already have. That's a really great question, Kevork, and unfortunately with the time that I have here, we're not going to be able to touch base on that today. I'm hoping that we can actually maybe do another session at some point on trading plan development, because the next step is next month we're going to be doing that at the Chicago event, the trading plan. But for today, the purpose of the discussion, we could spend several hours on a trading plan itself. Okay, so we'll have to go ahead and reserve that one. But what's important to understand is the my way to the highway is really in English, gang, saying sticking to your trading plan. Does that make sense? The patience to, watching this rewritten, it would really read, the patience to stick to your trading plan. The patience to stick to your trading plan. Does that make sense? Good, good. Okay, so let's go ahead and talk about number 2. Now, backup, then back up to my backup. Now, at first blush, I'm sure that sounds tactical, doesn't it? But if you really think about it, is backup and back up to your backup, is that really so much tactical? Or is that having the patience to stack the odds in your favor to make a higher probability trade? Okay, and that's what I really look at this. So what I do is, exactly, it's both. Absolutely, there's no doubt it's tactical. Okay, and so at the end I'll review which ones are tactical as well. But each one of these also has their psychological element, and that's what I'm trying to get people to understand. That, and that's why I feel like the Holy Grail is within you, because back up, then back up to your backup. Well, what is the biggest problem with waiting for backup and then backup to your backup? Help me out here, gang. For all of you that struggle with waiting for backup to your backup, what's your issue? And then you'll see, there you go. Now here's okay. I've got to pause the screen and go back because the answers are flying by here. But let me go ahead and read some of the answers that I see. Patience, fear of missing a trade, not many trades. Patience, impatience to take a trade, missing trades. You may miss a trade. Confidence in the plan. They don't happen as often. Get frustrated by missing occasional winners. Patience. I'm hearing the word patience over and over and over. Missing trades. So the fear of missing a trade or having the patience to wait for a setup that makes it higher probability by having backup and backup to the backup. What is that to you? Fear and patience. Exactly. It's psychological, isn't it? So you see how even something that looks tactical is fear and greed. That's right. It's fear and greed. Absolutely. So, and by the way, thank you very much for all of your answers. You guys are doing great. Appreciate you guys, starting it right off with me here because I want to make sure I'm driving home that point. It's something that may look tactical on the outside and out of place in a psychological webinar is actually very much right at home, right here, with those two key words, isn't it? Patience and fear of missing a trade. Okay? So, for me, and how am I going ahead and, having my, great winning streak, focusing on consistency, okay, this is one of those elements, which on first blush may just look like a tactical solution, but as you can see very clearly, also has a strong element of psychology. So, guess what? If you are an impatient person and you cannot restrain yourself to take less trades, that's right. Well, that's what can happen. Stephen says fear of missing a trade leads to impatience and stupid moves. You'll start to take more aggressive trades. You'll start to deviate from your risk trading plan. Okay? So that's how things can turn very ugly very fast. Okay? Bad things can definitely happen as a result of impatience. So that's why it's important to understand if you're struggling, ask yourself, how many of you sit there and say, oh man, this doesn't have a backup to the backup, but dang it, it looks really good at first blush. Man, maybe I should just take this one anyways. Man, I didn't trade earlier today, but and I've been doing really well. I've taken 30 out of the last 30 trades were winners, or some of your numbers have been much higher than that. 30 out of 30 is by far not the highest winning percentage that I've seen here. And so you get that point where you have so many, you have a certain number of wins in a row, but it's not frequent enough, so you go ahead and you start to push the envelope, okay? So again, we're talking about psychology here, all right? So as far as the backup, what we're looking at here is you need to start to ask yourself, the next time I go into looking at a trade and I'm looking for backup to the backup, or the next time you're going to look for a trade, ask yourself, when you see there is no backup to the backup, ask yourself this, is that because your trading plan doesn't require it? Which that's fine. If your trading plan doesn't require that, then throw it out the window. If that's not part of it, then you don't have to worry about that. Of course, if your loss ratio goes up dramatically, then maybe you should see if there's a one-to-one correlation there, right? Suddenly you stop waiting for backup and you start losing a lot more and getting stopped out a lot more. Maybe you should ask if there's a one-to-one correlation there. So you have to do some more testing. But the next time you go to take a trade and there is no backup to the backup, ask yourself, what feeling did you just have? Was it, oh man, dang it? Okay, even that right there, that's not, you should be saying, hey, I'm sticking to my trading plan. It's not there. Yeah, it's unfortunate, but you know what? I want to win. I want to win, and I want to be consistent, and I want to win. So ask yourself, are you saying, okay, well, that one doesn't meet it, and you move on less emotionally, or ask yourself, are you starting to get frustrated, flustered, and looking to bend the rules, okay, that you set forth for yourself and alter your risk trading plan? So it'll be a good conversation in Chicago next month about these risk trading plans, all right? Let's go ahead and talk again. Now, again, if I'm not willing to add to a position, I usually won't take on the trade in the first place, okay? And the thing here again, at first blush, that may look like a tactical situation. But for me, that's actually just part of my risk trading plan because I understand something that a lot of people don't understand. Perfectly timing every entry every time is extraordinarily hard to do. I've been doing this for many years, and as many of you see, trades will come literally right to the tick for me. But does that happen every single time? No, it doesn't. Okay? I just find it, I hate to use the word impossible because who would ever think that you can go for 14 months without losing trading position in the live trading room? There's a lot of people that just don't even believe that, but obviously all of you that have been with me the entire time know it's absolutely true. So that's right, exactly, Chevelle. Just like yesterday, I got the trade almost perfectly to the tick, and exactly, it makes it really tough for one contract traders to time things perfectly. Okay. And that's right, exactly. That's what I'm trying to do, Pete, is, Pete says, thank you for showing us it's possible. So, the thing is that, so for me, is, part of my risk trading plan, the way I usually look at something is if I'm not willing to go ahead and add into the position, if I'm so uncomfortable with the position, I don't feel comfortable in the position that I feel like the trend is ultimately my friend, that the thing is going to work out, and that if I miss it by 10 ticks or 15 ticks or 20 ticks, whatever the case may be, that if I'm not comfortable enough to still add in that I've identified it well enough and strong enough that if it does go 15, 20 ticks or 10 ticks beyond me, I'm not willing to add in. If I'm that shaky about the trade, what do I do, gang? What is it that you see me do? Exactly. I just don't take it. I stay out. If I'm that uncomfortable about a trade, exactly, I just move on. Exactly. So is that just tactical or is that psychological? I'm sitting there saying, I want a high probability trade, and tactically, I'm not comfortable with the probability there, so I'm going to go ahead and stick with my desire to have a higher probability trade, and I don't like what I'm seeing here, so I'm going to go ahead and focus on the higher probability, and then I do it like a champ, don't I? What you guys hear me say is, you know what, gang? There's no backup to the backup. I wouldn't feel comfortable adding into this position. No trade here for me. And what do? Do I sit there and do I sit there for the next 5, 10, 15 minutes lamenting about how terrible it is? Oh, this stinks. Bang, bang, bang. Start beating the desk, getting upset, getting frustrated that the market's, sticking it to me, that the market's out to get me, that the market's keeping me from winning today. No, I just, eloquently move on to the next position, and analyze the next chart, don't I? So right there, that's a huge learning lesson in going ahead. So rather than kicking and screaming and hooting and hollering, that's right. That's right, Kevork. Kevork says that appropriately, this is how I'm so often in what I call win-win position. Either the trade works out right away, or because I analyzed the trend well enough, then I'm looking for it to pull back, give me an even better value add price in the direction of that trend, and get a better price at a lower level, so when it rebounds into the direction of the trend, then I'm going ahead and getting a win with even more contracts later. So it's that what I call that win-win strategy that I like to trade for myself. But it all starts with analyzing something that I'm patient enough waiting for, waiting for the right types of trades. Now, where a lot of people get themselves into trouble is they don't wait for those kind of positions. They're just like, the market's moving up the last 10 seconds, I'm going long. The market's moving down sharply the last 10 seconds, I'm going short. And that's about as much thought as is ever put into that trade, right? Be honest about it. I used to be like that. So, but, all right. So basically, well, like I said, Ovid, we all have our different styles, and obviously, in my case, as we look at some of the digits behind it, because that's a whole other discussion we could discuss about in the live trading room, on any given day there. I don't want to get so much into tactical strategies today and start going through all those. I want to start, keep this focused to the psychology of it today, and we can continue on with the tactical each day in the live trading room. Okay, so with that being said, let's go ahead and move on to the next one. There, is there room to make a profit? Now, you bet, Ovid, because it's a great question, and I want to go ahead and discuss that tactically. Let's, in fact, just bring it up tomorrow, and we'll talk about that. So, if we go ahead and ask yourself this question, is there room to make a profit? Now, how many of you even ask yourself if there is room to make a profit before you take a trade? Or how many of you used to not ask yourself, you just saw the market going up for the last 10 seconds, you went ahead and saw it go down for the last 10 seconds, so you fired into that trade, I'm seeing a lot of knees, and then went ahead and then suddenly realized, uh-oh, I just went short at a support level, or I just went long at a resistance level. Now what do I do? Sure, I was going to say, to my knowledge, unless you've only been trading for a couple of days, you've probably found yourself doing that. Okay, I certainly did it plenty of times. As a junior trader, no doubt about it. Okay, so I can directly relate to those, because guess what? Didn't trades always seem to look their best? Like the long side trades, didn't they always look like they were going to go to the moon right as they were pumping into those resistance levels? That's when they were moving the fastest. That's when they were moving the most feverish. So clearly it's going to break right through that level and just keep on shooting up, isn't it? Or it started to get the fastest. Remember that feverish price activity that I look for so much each and every day? It was going to go ahead and just push right through there. So there's a tactical element there, which is there room to make a profit? But in reality, how many of you have gone ahead and deviated your trading plan strictly out of pure greed, which is psychology? How many of you have a trading plan that says, well, I'm not going to take a trade unless I feel like I can make at least 4 ticks or 6 ticks or 8 ticks or 10 ticks? But then you went ahead and you started bending the rules because you saw, well, gee, there's only 3 ticks of profit here, 2 ticks, but gosh, I haven't had a trade for the last several hours or a day, whatever it may be. So, you know what? I'm going to just bend the rules a little bit here and go in for a quick kill. Okay? I'm just going to go in here for a couple of ticks. Okay? So basically, because there wasn't the room to make the profit, yeah, exactly. Like I said, many of us have done something very similar to that. So, you're definitely not alone. And so what we're really talking about is greed and the fear of missing a trade, even if it's just for a couple of ticks, to the point where you modify your trading strategy. So your typical strategy says as you're coming up to the resistance, if you can't make at least 10 ticks of profit, this is an example, or whatever, 5 ticks of profit, that there will be no trade. But you're up here, you're seeing this beautiful strong trend in the background, you're seeing fast price action here, and you're like, I know there's that resistance level here. I know my risk trading plan says don't do it if I'm within 10 ticks, 8 ticks, 6 ticks, 5 ticks of the resistance level. But I haven't had a trade since yesterday. I got a really strong trend in the background. I'm just going to go ahead and jump on in here just for a quick 2 or 3 ticks. Now, is that tactical or is that a psychological issue, gang? Absolutely. Fear and greed. Fear of missing an opportunity. Duncan says, wow, I see it now. Okay? Yeah, it's a discipline, psychological issue. Okay? That's right. You talked yourself out of your plan. Absolutely. Okay? So basically, what we're talking about here is when you start to deviate from your plan. If you're as a discretionary trader, you have discretion, but at the same time, we're not talking about you trading against a black box system. We're talking about you trading against a trading plan that you've developed for yourself that's already supposed to fit within your comfort zone, right? So what you want to be careful of, and Mario, I saw your question there about discretionary versus bending the rules. Your trading plan helps define the road, right, gang? And if you're in the United States, you're driving on the right side of the road. If you're in, let's say, London or so, you may be driving on the left side. But let's just go with the right side here, since today I'm broadcasting from the United States, not from London. So let's just go with this as the example here. So my plan is to go ahead and be very finite in what I'm doing. And let's go ahead and erase the drawing and just focus on the one side of the road. So here's the overall trading plan. And then here's that center line, and I want to be really super precise even on that side of the highway. Okay? Now, is there some discretion within the highway? Yeah, there is, isn't there? There's small deviations here. There's larger deviations and discretion here. And then there's this flat out going off the reservation from your trading plan, isn't there? So, is there discretion within a trading plan? Yeah, as long as you're staying within your parameters. Okay? But when you start going ahead and going off the reservation, when you start going off the highway there, okay, in the name of discretion, what you're really talking about is what? If you start going off the highway in the name of discretion, you're really doing it in the name of greed. Right? Exactly. That's right, Jay. So you're doing it in the name of greed, right? Can you give me any other plausible explanation? You define this beautiful trading plan. Okay, you back tested it, it works, you feel comfortable with it. Then you get into the live trading environment, and what do? You just throw the whole darn thing out the window and just go free sailing here, and then find yourself in a black hole or getting smacked by a freight train because of fear or greed. Okay? So, that's why I submit to you again, gang, and why you hear me so often say that I believe that the Holy Grail is within, okay? And that's why I try to focus so much on the psychology each and every day there as part of the equation, because on the first, on the face value, is there room to make a profit, may sound tactical, and it is partly tactical, but it is also very much psychological. Does that make sense, gang? Okay, Jerry B, thanks. Okay, excellent. Very good. Never play with house money. Okay, this one right here is just flat out psychological. I have heard, if I had, I don't know, probably, $1,000 for every time I heard this one, I could be nicely, comfortably retired just on this one. Because, yeah, and Lance L says that rubs me too. So many of us have heard somebody make this comment. Some other trader we know or love. I hear it a lot because, especially the new students that come to our family, it's like, hey, wow, that's a great trade. Now you got house money for the next one. It's like, no. Okay, first of all, let's just take into consideration the factors behind house money. When you talk about house money, what are you implying there? The whole concept of the house. What are you implying when you talk about the house? Exactly. Gambling, casino. Exactly. You're right on it, gang. You got it. That's right. Okay. Very, very good. Nice work. Okay. Now, so that's the first thing. Now, you all know how I feel about trading and gambling. In fact, those of you that know me personally know that I really don't even gamble. When I go to Las Vegas, the last place in the world you'll ever look to find me is in a casino. I'll go usually I go to Las Vegas obviously once or twice a year, but for like trade shows and stuff like that. But what I do is, of course, then on the off hours, go to dinners, go to shows with you guys, getting to know you guys. The only time, like once every other year or so, I'll go down into the old section. I'll go to like a craps table, but of course I don't even remember or know how to play. So what I do is I place a bet for the host and ask them to remind me how to play it. So by placing a bet there with them or for them, they're helpful, and they kind of teach you, remind you what how the strategies behind the game and stuff like that. So that's how little I know about gambling. Okay, I don't gamble. I don't like to gamble. Okay, as you know, I focus on high probability each and every day. Okay, so with that being said, the whole concept, I just cringe when I hear people say, man, that's great, I got lots of house money, or now I'm playing with house money the rest of the day. Okay? It's a real pet peeve of mine because it kind of shows a person's psychological disposition to how they're treating this whole thing. Because there are, and that's a psychological issue, there are a lot of people that treat trading like gambling. It's just more of a game than a serious profession. And as I believe a lot of you heard Hubert say last week, when John Hubert and I were broadcasting from Texas together, we're not going to appeal to, we're here for the serious long-term traders. We're not going to appeal to the gamblers. Okay? That's not what I do. John does, Hubert does. We're not going to appeal to the gamblers. I've been doing this for several years, And I plan to be doing it for several more. I've watched lots of traders come into this business. I've watched lots of traders blow themselves out of this business. And then I've had the privilege of going in and watching other traders go ahead and thrive in this business. And so the people we're going to appeal to who are, the people who are serious for the long term with this. So ask yourself, do you find yourself, even if you do value, worship, covet your money, okay, and I'm not talking about this from a religious perspective, but I'm talking about even if you do place more value on your money than it being just a gambling chip, okay, ask yourself, do you find yourself going ahead and sitting there saying to myself, hey, cool, now I'm playing with house money the rest of the day? Because, gang, I'm here to tell you, if you're thinking of it in those terms, you are not trading professionally. Does that make sense? This is more of a game to you, and more of a gamble than coming in here, going ahead. That's right. It should be more of, okay, that's my mortgage, that's my electric bill, that's my data feeds, whatever the case may be. Okay, and so basically, that's money you've worked hard. If you've put your time and effort in, and most of you heard Hubert say last week how he'd gone ahead and really his family life, my family life, John's family life has all suffered as part of becoming great traders. Okay, and so now it's been really beneficial in some ways, and then other ways it's caused suffrage for the family. So there's sacrifices. So if you're in there, quote unquote, doing it right, and you're suffering as you're spending countless hours trying to become a better trader, learning systems, learning methodologies, trying to apply a winning methodology, you're putting all that time and effort in, okay? Is that really then, after all that time and all that effort that you've put into it, is it really house money? Or is it money you've worked hard to earn? So, with that being said, when you walk into a situation during the day, you've made money in the morning, okay? Ask yourself, when you come back into it in the afternoon and you start to feel a little wily coyote and you start to go ahead and get a little, froggy, a little frisky there, and you're sitting there saying, wow, well, I made X number of hundreds or X number of thousands of dollars this morning, so I'm playing with house money, and I'm starting to sit there and think that I might be seeing another trade. Since I'm playing with house money anyways, that's okay. What happens if you make $500 in the morning and then you go ahead and try to gamble that money and parlay it into a bigger win in the afternoon, and it turns into a loss? Now what happens? Now suddenly you're no longer playing with house money. Now you're not only playing with house money, but they took your money. So now what do? Now you're up $500 of house money in the morning, supposedly, and now you're going to go ahead and be down $500 more than you actually even originally had there. So you lost $1,000. So now they've taken $500 from you on the day. That's right, Jay. You start going ahead and taking trades that deviate from your trading plan to win it back, right? How many of you have been there pulling that stunt? Yeah. Didn't take long to get a whole lot of answers on that one. Sure. Okay. So with that being said, a friend of mine. Yeah, that's funny. So with that being said, what we're talking about here is, well, yeah, revenge trading. That is, so what we should say is, psychology there, right? Revenge is psychology. That's not a sound tactical strategy, is it, Neil and Marcia? Revenge, that's purely psychological, isn't it? So, with that being said, never play with house money. It's money that in some way, shape, or form you've paid to earn. You've invested time, taken time perhaps away from your family. You've gone ahead and paid data feeds, dues, subscriptions, whatever the case may be, to get that. It's not house money. Okay? Avoiding Superman, Tasmanian Devil, and Little Piggy Complex. Now, we've seen a whole lot of this, and unfortunately, we're going to see more of it as more and more of you have becoming more and more successful. We've had a couple of famous cases here recently, even in the live trade room, from people that were willing to share their experiences publicly. Lots of you seem to share your experiences with me privately, but only a handful of you usually are willing to come forward and share them publicly. And for that, I thank you. So a couple of ones that come to mind, Thomas B., Dr. Obata, are a couple of famous ones that come to mind where they were doing really well, having a great run of it, and then they woke up one day and suddenly thought that nothing could stop them and started completely deviating from the trading plan. You recall a couple weeks ago when we saw everything was pointing to a big rally in the Russell 2000. I was talking about it over and over and over again about why I wasn't going to short there. But Russell 2000 led to a lot of great trading the week before. And, Thomas B. very openly and honestly shared how, he thought he could stop that freight train. He thought that it wasn't as bullish because he'd done so well with trading it the last week. When it popped up, he thought it was just going to go ahead and turn right back around. And unfortunately, it didn't. And it kept going up and going up and going up against him. So basically he was completely on the opposite side of the trade that I was, which that's fine. There's nothing wrong with that. But he felt that because of his long-running success prior to that Monday walking in, he just literally woke up that day. Kind of like me 14 months ago, I literally woke up one day and said, look, I don't want to have another losing trade. He woke up that day basically saying, nothing can stop me. Okay? So it's the Superman / Wonder Woman complex for all of our awesome, lady traders here. So and then Dr. Obata was going ahead and, taking a bunch of crude oil trades and doing very well with it. But then he turned around and started taking some very high-risk trades against key trends in the afternoon because he'd had such a great morning kind of playing with house money, right? And so he went into the afternoon, and he's saying yes here, and he went into the afternoon just pushing the envelope. The more money he made, the more he pushed the envelope, and then he went ahead and, things got ugly. The market just turned around and spiked hard and sharply against his position back in the direction of the daily trend. He was short on an intraday basis, and as he said, he lost twice as much as he made. But that Superman complex, that Little Piggy complex, playing with house money complex, all set in for him. Okay, and so those are a couple of high-profile cases that we've seen just recently from traders who very successful win streaks and woke up one day and just didn't have their heads screwed on straight. Now, I'm here to tell you, as the guy who, of course, has gone 14 months without a losing position in the live trading room here, it takes enormous discipline to go ahead and do that. But what I do is, for me, it's just like second nature at this point. I just, every trade I look at, I'm looking at the next trade as intensively as the last trade. So I pull out the microscope every trade. Okay? Each and every trade, pull out the microscope, like the 3 trades we did yesterday. I looked at them, analyzed them. Did I just go ahead and I had house money? Did I just fly in there and take any old trade for any old reason? No, not at all. In fact, because of the dome problems that we were having yesterday, I was even more intensively scrutinizing things. Okay, so the point is there that the Superman complex is the Superman / Wonder Woman complex, and basically what that complex is going ahead and sitting there having such a long win streak, and I'm hearing and seeing more and more and more of you have these longer win streaks, that one day you wake up, suddenly you're smarter than me, you're smarter than John, you're smarter than Hubert, you're smarter than the world, you're smarter than yourself. And nothing can stop you. There is no kryptonite for Superman or Wonder Woman. And you just go ahead and keep on going. And basically, you wake up and do a trade that is completely against your character, completely against the grain, but you feel that you can handle it because you've had such a strong win streak. So, I strongly, strongly, strongly encourage you. Now, just think, if you think about that, couldn't I do that? Of all people, 14 months without a losing position, big trading account. Don't you think, gang, I could be taking a lot more trades each day? Sure I could. You all know it. You all say it. Rob, you could be taking that trade. Rob, you could take that trade. But just because I can, fill in the blank, gang, doesn't mean I should. Exactly. Nice work. Okay? So, each day, each hour, I try to go ahead. I have superior trading psychology. That's why I try so hard to focus on higher probability, focus on keeping that microscope turned on and tuned up every day. Yeah, that's right. Just because you can lose money doesn't mean you should. Exactly. And Dilip says there, if you get in the habit of taking those trades, it can lead you off the road. Question mark. Dilip, that's 110%. That's 1,010% correct, Dilip. What can happen very easily for a person in my situation who's had that kind of success, they can let it go to their head, and they can sit there and very quickly say, well, I've been doing this, and I've been making this, nice 6-digit income. Okay? Well, if I go ahead and widen it to here and here, I can make 7 digits, and keep driving forward. Or, like some of you who have been doing really well here, now you've actually told me you're planning on opening up hedge funds so that you can go ahead and focus on even bigger profits, 8-digit incomes. Okay? But for me, personally, Rob Hoffman, I believe slow, steady, and consistent, regardless of how I get there, is real important. And I do that staying in the confines, of my risk parameters. Have I gone ahead and deviated out of my parameters in the past? I have, but you'll notice no sooner do I go ahead and do that than I usually find myself, even if I start to veer off the road a little bit, try to get back onto this area. Okay? I try to stay in this very narrow path. That is very, very, very hard for most people to do. They very quickly want to start going ahead. And, for every, Dr. Obata, for every Thomas B. that have been willing to share their stories, actually Bob M. here, he just typed in a message. He had recently shared about the little piggy complex where he got greedy, turned a nice winner into a loser. For every story for people that share it, I know there's lots of people privately it's happening to that just don't come forward and talk about it. But the people that are willing to allow those things to be used as an example do. So, in my case, I'm sitting here, staying on this very tight, narrow path, okay? And when I see myself start to go off, then I'll go ahead and I'll try to whip myself back into shape, okay? So where's another area that I also whip myself back into shape? Well, on days where I've had big wins, okay, I'll go ahead and a day after a big win, what do? What happens the day after big wins for me? Okay, days where I'm taking 10, 20, 30 plus $1,000. Exactly. I back off. Now, what do most people do the day after they make 10, 20, $30,000? That's right. More. They charge back. Lots of good answers here. For me, I back off, take it easy, slow down or don't trade, stop, reflect, teach. All good answers there. And a lot more like that. The junior trader mindset, they'll get more bold, more trades, amp it up, go guns blazing, take more risk, get euphoric. Good. That's a real good way of describing it. They have this sense of adrenaline, this overall sense of well-being, right? So very, very well said. Okay. And so I'm seeing the more and more of you that are seeing more and more success. I'm going to see more and more of you have the Superman / Wonder Woman complex. Okay? So, then the Tasmanian Devil and the Little Piggy. Well, Tasmanian Devil, what that is basically bouncing from trade to trade to trade. Now, like yesterday, we did 3 trades. What I like to do usually is ideally talk about those trades between trades. And but what happens, I'll find, is a lot of the junior traders are like, that was great. Let's do it again. Let's get the next one. And so here I'll be taking a trade. I'll just get done with the trade, and then I start to try to explain the trade, kind of like capstone the learning process for you guys. And what happens? No sooner do I do that, people are starting to type in, that was great, let's do it again. Hey, I see crude oil's moving, go look at that. Hey, gold's moving, go look at that. And I'm like, but wait a minute, gang, we haven't even gone in and really debriefed or talked about this trade, and you want to jump to the next one. And the risk is you don't learn the lessons learned, for better or for worse, from what happened, in the last trade. So what you're doing is you're just bouncing from trade to trade to trade, okay? And the problem with that is, okay, basically what happens is that they're not taking the time to journal. I think most traders, sure, it's psychology. How is that psychology, gang? It's fear of missing the next trade. It's the greed of wanting more, isn't it? Yeah, that was good. Yeah, that was good. But that was $60 or $100 or $200. Yeah, let's do it again. Let's do it again. Yeah, another 60, another 100, another 200, another 1,000. Yeah. Right? So what we're really talking about there is the fear of missing the next trade and sheer greed. Okay? Sure, it's not to say that there won't be sound trades within there as well. Okay, there will be legitimate times where you are moving from trade to trade to trade. But the thing is, in the real world, for a junior trader, for an up-and-coming trader, a trader who's not as consistently successful as I am, or even close to it, then really they should be sitting there documenting every single trade they took. What were the conditions prior to them taking the trade? How was their psychology that morning? Did they get in a fight with their spouse about bills? So they were trying to double up on some trades? Were they sick that morning? Was there a death in the family? What were the kind of the external factors going into the morning? What was the situation in the market? Okay, what was the news that morning? What was the when you were looking to go long? What were the indicators saying? Why were you looking to go long? Why did you then actually take the trade? Where did you take the trade? Why did you stay in the trade? Why did you hold on to the trade? Okay, lots of questions that should be asked and documented as you're sitting there trying to become a better trader, okay? And yet most of you that are up-and-coming traders don't document anything. So then you call me and say, Rob, I just, I was doing really well for a while with you, and then all of a sudden it's like now I kind of find myself doing my own thing and I can't figure out what I'm doing wrong. I think I'm doing what you're doing. And it's like, well, let me see your journal. Let's talk about it. Oh, well, I don't journal. Oh, okay, so basically I got no roadmap to follow to see where you went wrong. Then I've got to try to get you to pull out from memory how you've changed your way. So it makes it a lot harder for me to find out, right,